Assalamu alaikum everyone. I am Kulsum Ali from BS Economics 7th semester. Today the topic I'm going to discuss with you is information asymmetry and investors' financial behavior in Pakistan Stock Exchange. So this shows we are going to discuss about how information asymmetry is affecting the financial behavior of investors in Pakistan Stock Exchange. Firstly, let's discuss about information asymmetry. Let's understand what is information asymmetry. It's basically an idea that one party has more knowledge or information about the benefits than the other party in any market. These two parties can be the investors and savers as well as borrowers or lenders. Secondly, financial behavior. Financial behaviors are the actions, decisions, and patterns that individuals or other organizations adopt while managing their financial resources, such as investment, saving, spending, and budgeting, etc. Lastly, the stock exchange. Stock exchange is explained by Abdullah and Helu as a room where listed companies purchase and sold their shares. So we get the idea that stock exchange is a market where different firms and different companies come together and trade their stocks and shares with each other. For understanding the trends of Pakistan Stock Exchange, we will know about the history of Pakistan Stock Exchange. Pakistan Stock Exchange was established in January 2016. Before that, it was separately Karachi Stock Exchange, Islamabad Stock Exchange, and Lahore Stock Exchange. After 2016, it was merged and called as Pakistan Stock Exchange. The ownerships of Pakistan Stock Exchange includes China Financial Futures, 17% shares, Shenzhen Stock Exchange with 5% share, Shanghai Stock Exchange, 8% share, Pak China Investment Company 5% shares, and HBL also have 5% shares. And the remaining 60% shares are owned by the investors in country and abroad as well. After the history, let's understand what are the important roles of stock exchange in the economy. Stock markets plays an important role in economy because it mobilizes domestic resources and channels them to productive investments by different investors. By knowing this, let's move to the case studies. What case studies are telling us about the importance of stock exchange in Pakistan? The study by Ahmed says that stock market in Pakistan provide an average quarterly return of 2.86%, shows a little share. A finding by Hanwood suggests that stock market in Pakistan not that developed to play its due role in influencing aggregate demand, which shows it's not playing that much important role which it should play. A disturbing feature of stock market in Pakistan is that it cannot be characterized as a leading indicator for economic activities. Information asymmetry. What is information asymmetry and how information asymmetry is playing its role in Pakistan Stock Exchange? Number one, knowledge gap. There is knowledge disparity or gap between the investors that come to invest in the stock market. And this gap of knowledge influences the investment behavior, leading to various market phenomena. Second one is insider advantage. Insider advantage means that the insider managers of the firm have more information than the outsiders who are the investors. That is, insiders or borrowers are more known about the firm valuation than the potential investors or the lenders. And the third is broker knowledge. Broker knowledge means that brokers have more knowledge or the stream of knowledge based on the confirmation to decide to invest or not, and than the investors who want to invest in the stock exchange. Investment behaviors and information asymmetry. This tells us that how information asymmetry is impacting the investment behavior or investment decisions of different investors. First of all, it influences investors' investment decisions. And an important act is performed by the investors, which is called herding. Herding is a phenomena where individuals or groups tend to mimic the behaviors or decisions of large crowds, often ignoring their own individual analysis or judgment. Even this herding is rational. It causes a great instability in stock market. So herding behavior is seen to be increasing in Pakistan Stock Exchange. This information asymmetry deals with two parameters that are produced in investors' minds: perceived risk and perceived failure. Perceived risk or perceived financial risk is purchasing securities will not be acceptable to achieve the best possible monetary gain from the investors. That is analyzed by Gibson and Lane. And perceived failure. Perceived failure is a panic experience that creates a judgmental effect on the future investment decisions as well as others' decisions, leading to a lack of motivation and a loss of self-awareness in the investors. Therefore, such perceived failures become unavoidable, become difficult to make effective recovery strategies to control perceived failure by investment society. Negative attitude. Now, these perceived risk and perceived failures results in negative attitudes in the investments. What's a negative attitude? A negative attitude is a lousy deposition, feeling, or a manner that is not constructive, cooperative, or optimistic. This is the same for the financial institutions because the investors with negative attitudes never make investments. Thus, it's not just ability to plan, maintain investment accounts. This causes fear of risk in them. Many people are critical to fear of risk and feel threat of loss. Most investors have no proper knowledge about the companies when making more critical financial decisions for their well-being due to information asymmetry in the stock market, and they start to showing illegal behaviors. It can be easily explained through financial behavior that the reason behind individuals' decisions and difficulty arises in computing what impact that the resolution will have on the investors. Now, let's make a theoretical framework from all these concepts we have discussed before. First of all, information asymmetry that arises in a stock exchange market results to perceived risk and perceived failure in the minds of investors. These perceived risk and perceived failures give results to negative attitudes in the investors. And the negative attitude is actual financial behavior that is shown in Pakistan stock exchange market. Now we will see the existence of asymmetric information and behaviors like herding in Pakistan Stock Exchange through different case studies or researches on Pakistan Stock Exchange. The case study by Ahmed suggests that investors in Pakistan Stock Exchange exhibits a tendency to follow the actions of others, which means herding. It has a positive relationship between information asymmetry and herding behavior because investors may be more likely to herd when they perceive that others to have superior knowledge due to limited information access. And other case study by Batul says that direct relationship was observed between knowledge asymmetry and perceived risk and perceived failure. A pessimism attitude exhibits a negative correlation with one's behavior. Now let's see what are the factors that are influencing the behavior of investors in Pakistan Stock Exchange. Number one, low financial literacy. Financial literacy of investors in Pakistan Stock Exchange have reduced resilience on fundamental and technical analysis when making investment decisions. Hence, many individuals are not subjected to quantitative management techniques. They do not have quantitative management techniques to manage the risk, or they do not have financial literacy. Self-traits. Lack of self-trade is crucial reason for negative behavior. Self-confidence play a central part making investment decisions between non-persistent candidates and persistent. Information asymmetry, perceived risk, and perceived failure are the three variables or key determinants that contribute to negative attitude of the investors. Impact of information asymmetry on financial behavior in Pakistan's stocks market. Information asymmetry shaping investment attitude and decision making. It creates uncertainty leading to increased perceived risk and fear of failure. This hesitation weakens participation in stock market, reduce investment rates, and ultimately determine market performance. Negative attitudes resulting from information growth further exacerbates the issue, and addressing these challenges require improved information, transparency, and accessibility to promote positive investor behavior and restore confidence in the market. Lastly, what can be the strategies to mitigate the information asymmetry in Pakistan Stock Exchange? Strengthening regulatory frameworks. In role of SECP, Security and Exchange of Commission Pakistan, enforcing strict corporation disclosure rules, promoting investor education, enhancing access to technology and real-time data, and bridge the divide can mitigate the information asymmetry. Now, recommendations. What are the recommendations for Pakistan Stock Exchange and other policymakers of Pakistan? They should encourage transparency, strengthen penalties for insider trading, and create platforms for retail investor education. Let's conclude all this into a nutshell. When investors do not have timely and accurate information, they can make poor decisions, face higher risk, and become less efficient. To fix this, it's important to make rules and ensure transparency, provide better education, and improve access to reliable information. These steps will create a fairer and more stable market, giving investors the right tools and building trust in financial markets will lead to better decisions for investors and stronger Pakistan Stock Exchange overall will be. Thank you for joining me. Have a good day.